Despite today's rally, investors continue to be cautious overseas.
Yes, they do, in fact. Right? They continue to be because, well, we've got worries about China, of course, out with weaker than expected GDP numbers. That was overnight. Also concerns over Italy's budget, which are front and center as the EU slams that 2019 budget plan. With us now on set, contributor, really? That's what we call you now?
Yeah, you call me contributor.
Okay, well, we're happy to have you here.
Pleasure to be here always. Good to see all you guys.
Michelle Caruso-Cabrera. Let's start with Italy.
Sure.
Which I know you spent a good amount of time on. How concerned should people be about their ability to contain that budget at this percentage of GDP, budget deficit?
Well, the EU and the ECB have a lot of levers, right, where they can instill a lot of pain on Italy to try to rein in this government from their spending plans. Of course, inflicting that pain could lead to a lot of volatility. But I think the way the market acts, you see the U.S. market higher today, the EU, I mean, the euro weak, but certainly not acting like there's an existential threat. I think you could see a lot of volatility, but ultimately the market acts like they think they're going to get to a resolution. And I think that's probably true because what do we see over and over again from leaders who think that they can flout the bond markets? Once they figure out they're going to have to divert more and more revenue to interest payments or to bailing out a bank, and they can't spend the money that they wanted to and what they originally intended, what's the point? And they're put in a box.
Yeah, and the banks you mentioned. In Greece.
Right, that's what they did, right?
Much smaller economy.
I mean, you do mention the banks. I mean, obviously that's where the focus always tends to be, in Italy especially.
That's the doom loop, right? They carry a lot of Italian debt on their books, so if they have to market to market, every time you see Italian yields rise, they got to mark it down. It doesn't really matter till the end of the quarter when you have to tell the ECB what your adequacy capital rates are, but still, it's problematic. And so the banks are where the leverage is, that's where the problems are, that's where the focal point should always be. They're limit down today in Italy, right, the Italian banks. They suffered dramatically. They're down like 25% so far. They are deep in a bear market.
So is this just going to come down to Mario Draghi again doing whatever it takes to save the euro, and the politicians are not going to get it done?
So whatever it takes, yes, I think so, to answer your question directly, but it's probably just the opposite of what it used to be. Whatever it takes was we're going to buy whatever we can. We're going to take whatever collateral we have to. We're going to be there for all that. Now he's got to put the hammer down on his compatriots, remember he is Italian, and say, we're not going to do that. You're going to have to follow along because the precedent would be terrible, and they're carrying all kinds of Italian debt on their balance sheet that they need to worry about.
EU Commissioner Pierre Moscovici, though, has said the EU won't interfere in Italy's economic policies and understands Italy's government's economic priorities, going on to say they're not willing to lecture Italy's government on its budget.
He's French, right? Yeah, I'm not surprised.
Yeah.
Yeah, I mean, the French would say that. But ultimately, it's the Germans who are in charge, right? And there are EU budget rules. So that is a reflection of the dynamic that exists always in the EU, right? France always wants to be lenient on Greece, et cetera, because they historically have wanted to flout the budget rules as well.
Michelle, China's been a much larger impact, certainly on our equity markets, continues to be. At any point, you could see a headline that changes sort of sentiment during the course of even the day. 6.5% GDP growth. Retail consumer quite strong, but of course the numbers are coming down there in terms of growth.
They're coming down. And they're probably even worse than that because, of course, this is a cliche by now, right? Nobody believes the GDP numbers out of China. We believe they are constructed to deliver a message. And so if you follow the psychology, the economy there is probably weaker than even that. And then when you see all the headlines, if you look at the South China Morning Post every single day there are headlines that indicate that economy is weaker. How much of a flow through to the United States is the key question. Transmission mechanism is less clear than what happens in Europe. They've got a walled capital account, so they can constrain a lot of things. We don't like that they don't let money flow out of China, but right now, when you have situations like that, it works in the rest of the market's favor around the world.
It sort of gets at that question, though, is it weak enough to bring China to the negotiating table in a meaningful way and give the U.S. leverage in this highly anticipated meeting between Xi and Trump in Buenos Aires at the end of November?
I'm not sure it does because China's problems are so much bigger. China's problem is this. They want to go backwards. Under Xi Jinping, they want to go backwards. All of the market liberalization that started under Deng Xiaoping has been stopped, and over again, we see retrenchment on all fronts. It's not in their thinking that having a more liberal, dynamic economy is good for them. They just don't seem to believe it. And until they
It's worked
get
out
there,
pretty well for them so far, Michelle. I mean, they've only taken, what, 400 million people out of poverty.
I would argue that that happened in the first 20 years when they were reducing the number of ministries, reducing the level of intervention into the state economy, right? I mean, that was going lower and lower and lower, and now it's going backwards. I would argue, in fact, that they've actually stalled because it stopped under Hu Jintao. The banking reforms that should have been done didn't happen, and here we are now with more money at the state-owned enterprises. That crowds out higher quality money, money going to higher quality investments.